Let you know we got another important signal today on the S&P 500. Remember, we had these 9-9 signals in the weekly time frame with the top. We had the 9 signal and we topped right after that October 9th. And we had that reversal bar, but it's not yet been confirmed. We've gone up, we've gotten a lower high, you've got a potential head and shoulders now. We closed below 65.50, which is the low of this bar right here. Now, this is a reversal pattern slamming into the major resistance of the upper channel in the weekly time frame. I warned you about that over and over again. You'll see it in this video. But today we get another warning sign in the daily time frame after getting that 9 count back at the peak, and I'll show you that up close in a second. Every single one of these 9 and 13 counts has led to either a sideways correction or a pullback. Either price has gone sideways or we've gotten a pullback. The pullbacks have been small. This is likely going to be a reversal off of major resistance, but we have the 9 count, and if we take out our 50 period, it will be a bigger correction or a complete reversal. We got a doji today. The S&P completed a 13 countdown sell signal with a lower high. I warned you about the 13 count last week. Told you it could be coming. We're getting it this week as we start the week off. 9 count. The 9 count marked the very day of the top. Could the 13 count mark the very day of the lower high if we get a lower high and get the head and shoulders pattern beginning to play out? And again, come down here and take out our 50 period and take out 65.50 and confirm all of this. Just wanted to make you aware that we are getting a 13 count down sell signal for the lower high as we got the 9 count over here. Sometimes you get the counts, you go a little higher, that would invalidate head and shoulders pattern. If that happened, we go back up to resistance, but we're back testing the trend line from the May low. And if you get a doji and back test successfully and turn back down, you can have a lower high and a lower low, as I'm going to be talking about in this video. A reversal, a lower high, lower low, and a possible evening star, evening doji star if we get a red bar tomorrow. The VIX is predicting a down day tomorrow. Okay, the Dow was up, but we got a mixed bag here. The Dow was up 218 points, up just under 0.5%. The S&P was flat. It had tried to rally, then it sold off, and then it tried to rally, and it fizzled out. And again, you get that potential head and shoulders on the 60-minute chart. We closed flat. The VIX was predicting a down day for the S&P 500 today, but the VIX signal yesterday also is predicting one for tomorrow, a down day for the S&P 500. Based on the VIX closing down more than 10% on Monday, it's predicting that we'll get a down day either Tuesday or Wednesday on the S&P. Had back-to-back warning signs on the VIX, so that in mind, the VIX is predicting tomorrow will be a down day. NASDAQ was down 0.16%. The Russell was down 0.42%, and the VIX was down 1.5%, still holding above that 50-period moving average. The VIX is predicting a down day in the stock market for the S&P tomorrow. 85% chance that you get a down day, 15% chance you don't. Basing that on historical data and the probability of closes on the VIX of greater than 10% to the downside. What happens to the S&P? 85% of the time, 2 days later, the S&P gets a down day. So it could start resuming the reversal that we had, our reversal bar back on October 10th. We got Netflix earnings and after hours, and like a sell-off. Netflix shares dropping. We're seeing futures drop a little bit there. Immediately after, I'll take a look again shortly, but missing earning estimates and a tax dispute with Brazil. They did miss on earnings per share. Looks like revenue came in right in line with expectations. And here we're about 13 minutes, okay, now 14 minutes past the close, and we're down on Netflix about 5.33% at the moment, but it is dropping in after hours. It was up for the session 0.23%, but it is declining. It's trying to recover off of the lows. It was lower initially right when the earnings were announced, immediately dropping. It's trying to recover just a little bit, down around 5% or so. Okay, we're going to get Tesla earnings tomorrow after the bell, and then next week we'll get a lot of important earnings and the Fed. Please support the channel with the link directly below. Follow the link below to take you to a secured site and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. Most YouTube channels have sponsors and sell you a lot of stuff. That's how the YouTube channels make their money. I choose not to do that. I don't want to sell you anything. So I just ask that you partner with me and do what you can to help out. If you could take a moment to do that, I would really appreciate that. Anything helps. I got sponsors contacting me constantly. I turn those offers down. Don't want to do it. If you have a YouTube channel, they contact you constantly, over and over again, and a lot of them. I'm no salesman. Here to look at the charts, not to have me sell you something. So if you could take the time to help out, I would appreciate that. Thank you for your consideration for that. New to the channel, welcome. My name is Ron. Thanks for joining us. Just want to talk about the VIX. The VIX is warning. The S&P is still at risk of a major sell-off, doing what it did over here. You know, when we first had this spike in volatility before the February sell-off, we pulled back here just below the 50 after getting above it, and then you back into the teens here, and you ended up surging. We already had the MACD in positive territory like we had back over here. We're already above the 50-period moving average. Right now we're back testing this trend line. After that surge in volatility, we had President Trump announce those tariffs on China to start November 1st. Tensions, and we saw that sell-off. That bar has not yet been confirmed, but you have a potential head and shoulders pattern that is now set up on the S&P 500, a double top McDonald's pattern, a McDonald's double top pattern on the NASDAQ. So again, going to be watching to see if we get a successful back test here, get back above the 200-period moving average. The VIX yesterday predicted we get a down day on the S&P 500, 85% chance in the next 2 days based on a percentage drop of greater than 10%, which we did get. This signal failed. The signals on the VIX have been pretty accurate. This one didn't play out. The S&P was flat today rather than getting a down day. So I don't know if that would qualify, but it had a slight gain. Nevertheless, as long as the MACD is in positive territory, bad things are going to happen on the S&P 500. As long as you're above 50, there's risk of more volatility and another surge in volatility, much like what we had here. Surge, a surge, a surge, and again, you're probably going to get a couple of surges here in volatility. Now, when these conditions were present previously, again, it led to the 21% sell-off here on the S&P in the lower window. The breakout with the surge, the sell-offs, this surge right here really led to the topping process, which we're going sideways right now, very similar to that, and you got a possible head and shoulders. You still may invalidate pattern by going higher, but you got major resistance, which we already turned off of back on October 9th on the S&P 500. We turned off major resistance. Flat, just up under a quarter of a point today. Again, we rallied and sold off and ended up flat. You can see here on the 5-minute chart, if we end up turning down and dropping below the 200-period moving average, we could start to sell off and begin the completing of the right shoulder on the head and shoulders formation. S&P has risen above the 78.6 Fibonacci of the decline. Here on the 15-minute chart, we formed this divergence, and we're starting to sell off. We took out the 50-period moving average here. Again, if we start to sell off, you've got a potential right shoulder for a lower high here. Got the McDonald's double top pattern on NASDAQ with either a higher high, we haven't done that yet, or currently a lower high. You've got a head and shoulders on the S&P 500. If this divergence now begins to play out, you could come back and fill the gap here. You could come back and start to move to take out the October 10th low. It's the neckline of the head and shoulders formation. On the 60-minute chart, this has given us a potential rising wedge kind of a looking pattern right here. We had a rising wedge over here, it broke down, and we back tested it, and then we pulled down, and then we came back up here and moved slightly above that 78.6 Fibonacci. I think you have an ABC structure going on right here, and this could be either corrective or we could have possible leading diagonal to start the reversal in the new bear market if we have now topped. But if we start turning down here and you start taking out 65.50, which is our low from Trump's 100% tariff announcement sell-off, then you're going to validate and confirm this head and shoulders pattern that I've marked right here as I've been talking about in my videos. This chart today on X, formerly Twitter. Now, notice the spread between the 50 and the 200. It's very narrow. You begin to sell off and drop below those moving averages. They're going to quickly cross. And if you take out the lower boundary here, you'll be breaking down from a rising wedge. If you break down here below 65.50, you'll be validating a head and shoulders. This pattern measures back to the low 6,300 area. That means we're going to be coming down and taking out the September low over here for a minimum objective target. So again, if we start to see that happen, you want to be watching, is this going to be a corrective pattern, or are we going to get maybe a leading diagonal moving down sharply towards the April low and give it all back in a 29% drop, our recent high back over here on October 9th. Bitcoin peaked October 6th. S&P peaked. Bitcoin's dropped 18%. It's dropped a little bit more and tried to bounce off its 50-week moving average. S&P peaked on October 9th, and the NASDAQ so far October 10th. We may still go above that. Double top, you sometimes go a little bit higher, and if you do, you're slamming right into that upper boundary of the broadening formation I've been talking about. At this head and shoulders, I would invalidate this and invalidate my L8 wave count, and we would go back up to the resistance levels if we push above the high over here from October 9th. So again, you push up above that level, you make a new high, it invalidates a head and shoulders pattern. And if you do that, you go up and you slam right into resistance levels again that we've been talking about. Could it be before the week ends that we start to see a sharp decline and start to see this pattern begin to play out, breaking down from the rising wedge, coming down, taking out the cloud, taking out the moving averages, and start moving to try to take out this level, or at least coming towards it in a sharp decline, going back to 65.50. So again, possible head and shoulders in play here, possible double top pattern on the NASDAQ. What I do want to say here about this sell-off and rebound back up is that if we stop making new highs, and if the head and shoulders does play out, you're in for a doozy of a sell-off right now, because either you're going to get, if you have the corrective pattern, you have A, you have B, and you have a C, and you're going to get a pretty big sell-off. Okay, a C wave often is a much more powerful decline than wave A. If it is a 1 and a 2, say we have a leading diagonal, then you're probably going to get a much bigger sell-off, because then you've got 1, 2, and you're moving into your extended wave 3, where it's probably going to be pretty ugly. So again, if in fact we have completed either wave 2 or B, again, you're likely going to come down and take out these lows, assuming that we stop making new highs, assuming we get a lower high, and assuming we come down and break the red trend line here for the rising wedge and break this trend line at 65.50. So again, corrective, and I am leaning towards it's not corrective. I told you back at the April low when I called the bottom, I told you we weren't going to crash then, that we were bottoming April low. Everyone was saying, oh, we're about to crash in April with the Trump's Liberation Day tariff, the launch of the tariffs, and announcement of the tariffs there. I told you we were bottoming at mid-year support because the sell-off was corrective. Here, we're going to be watching. Is it corrective, or is the move impulsive? We could have a leading diagonal in sections of threes. That's certainly possible. But again, whether you get a wave C or whether you get a wave 3 here, again, you're likely going to come back and take this level out. And when you do that, you're going to have a lower high and a lower low. So again, the risk is a correction, but the bigger risk is that you've topped and that you're now changing the trend, and the bear market has already begun. We just don't know it yet. Personally, I think that we're topping, hit my target level, and we're turning off major resistance of the upper channel in the weekly time frame. I've talked about this channel in the weekly time frame. Again, bounced up this trend line from 2020, 2022, 2023, and 2025, and horizontal support here from 2022, the previous high, now support. That was the bottom. Again, this has been my target, this upper channel line, 6,700 area. We had really no large pullback whatsoever before hitting that level. You just went up and slammed right into it. I think you likely are topping there, parallel boundary here with from the 2022 high. So again, this was my objective target level, the 67, 6,800 area. We've reached it. Any kind of meaningful pullback whatsoever. So I think you're topping. I think you're coming back down to the trend line here. I think you're coming back to horizontal support, and I think you're going to form a massive head and shoulders pattern. And NASDAQ's got that broadening formation, and it's going to collapse down to the lower boundary, towards the lower boundary of the broadening formation. And if it does, again, the Fed is likely to panic. You're going to get a bigger sell-off than what we saw back over here earlier in the year at the February high. The sell-off from the highs today gave us a doji candlestick. We went down, we went up, and we closed flat, and that gave us a doji back testing the trend line from the May low. Do you see this? Again, I've talked about how we back tested it once over through that level. We're back testing it again, doing the same thing with the September trend line, the shorter trend line from September. You back tested it now just a little bit higher, but you're still getting a lower high, even though we moved slightly above the 78.6 Fibonacci as we've seen on the intraday chart. So again, if we're successfully backtesting here, you turn down, then you can get your head and shoulders pattern, and you get your move towards the 6,300 level. That would be over in here, minimum objective target into the low 6,300 area. We'll be watching the May low, we'll be watching the April low, and we'll be watching do we get a bigger Fibonacci retracement, a bigger Fibonacci sell-off. But you are back testing here. Complacency reigns supreme. Start to get that big sell-off, and people got technical damage. This means nothing unless it gets confirmed. And if you get a lower high and a lower low and confirm it, then you've got a reversal, and you're confirming it on top of that. But we had that sell-off, and people took this trend line and concerns, and now we've risen back up, and people just shrug it off. There's nothing to worry about, when we're forming what could be a topping process in the form of a head and shoulders. If we can clear the trend line here, then you've got the red trend line that we turned off of. That's the channel, the long-term channel, and then our trend line from the 2023 low, we turned off of it over here, and where those trend lines intersect is where we peaked in that high 6,700 area. Around 67, 75, 65, 60, whatever it was. I think it was closer to 67, 65 or something like that. But anyways, whatever it was, slammed into these trend lines. So again, I'm going to be looking for confirmation of the reversal bar, which we have not gotten yet. And then if we do confirm it, you get a lower high, lower low, and you change the trend. So that's what we're going to be watching here. If we see a sell-off before the week ends, again, that CPI comes in hot, that could do it. Still got these trade tensions going on. Still got a government shutdown. Believe it's going to end. Maybe I'm wrong. And it ends this week. Hopefully it will, because you got people in pain here, like with the WIC program and federal employees not getting paychecks and these kinds of things. So again, hopefully these folks don't have to suffer too long. But I think this government shutdown is going to go on longer than everybody thinks. I think that will eventually show up in some of the economic data. And I think the Fed's going to panic likely by December or January, probably January, but I think December, January, early on in that first quarter, I think the Fed will panic and start doing jumbo cuts. You got a doji today, you got a wide range bar yesterday, so she got the possibility of an evening star candle pattern. That's a wide range bar followed by a doji. It would be a doji evening star, it's called, when the doji's present, but you have a wide range bar, a doji, and that's followed by a big red, ugly red bar, and then formation of the 3-day pattern would be whatever the low is, the red bar or the first bar of the pattern, third bar, the first bar, confirmation would be below, a close below whatever the low is of the 3-day pattern. But you have a possible evening star on the S&P 500 backtesting. NASDAQ, remember, is slightly lower. NASDAQ got the same candle, a candle of indecision in the form of a doji, wide range bar, a doji. So again, you've got a possible evening star if we get a big ugly red bar moving back to try to fill the gap tomorrow. And again, the VIX is predicting a down day for the S&P tomorrow. At least there's an 85% chance of it. So we'll be watching, do these dojis act as reversal bars? Doji can be a continuation of the trend, or it can be a reversal. reversal bar. This is a QQQ daily chart right here. You have a possible double top pattern returned off of this trend line of resistance, slamming into the upper boundary of the broadening formation. You had the Trump sell-off there with the tariff announcement. We've rebounded back up, and now you've got a potential double top. Sometimes the double tops, you get a lower high. Other times you get a higher high. If I bring it up close here on the 60-minute chart so far, and here's my little McDonald's double top shape here. So far, we're just slightly under this level. We had a slightly lower high there. Today, we couldn't push above it again. Times the double top pattern, and directly overhead is that trend line, the upper boundary of the broadening formation. But sometimes you get the double top and you get a lower high. Other times you get a slightly higher high. Bitcoin is famous for double top patterns, and it slightly moves higher and then it reverses. So we'll see what happens here. But right now, you've got a lower high on NASDAQ, and still on the S&P for a right shoulder, you still have a lower high on the S&P 500. NASDAQ 100 was flat too. It was down about 14 points. It was down 0.06%. So you had the S&P slightly higher by a fraction, not even about a quarter of a point higher, and then you had a quarter of a percent higher, and then you had, no, I stand corrected. That's right. It was 0.22% higher. So it was flat, barely a quarter of a point higher, and NASDAQ was down about 14 points, NASDAQ 100. So again, possible McDonald's pattern here. We'll be watching to see if you get the lower high here, do we pop higher and then have it happen? And if you do, you're going to go slam into that upper channel or upper boundary, I should say, of the broadening formation in the daily time frame. MACD rolling over here at the end of the session ever so slightly with the histogram going into the negative region. So we'll see, do we sell off? Again, Netflix is down in after hours. Does that do anything to the market here? Futures are slightly lower in after hours on that. Tesla after the bell tomorrow. Earnings this week. We'll get a lot next week, and then we'll get the Fed. Forget Friday, we're going to get the CPI inflation data. Furloughed workers came back because they needed the information for the COLA for Social Security. So we're going to get that information on Friday before the market opens, probably. I'm telling you, if that comes in hot, the market could sell off with that. Again, concerns about stagflation. Now, again, I think eventually we'll have a deflationary bust. That's what that's what happened back in 2007 and 8. The Fed was all worried about inflation, and then telling us we weren't going to have a recession, but they were so worried about inflation. Eventually, we had a deflationary bust about 10 or 11 months into the recession. Inflation still rose during the recession, believe it or not. We had a deflationary bust. I think that'll happen again. This is a 60-minute chart. This is what I think is play here. Either a lower high or you go slightly higher. If you do go slightly higher, you're going to slam into that trend line again. It's a fraction underneath it in the daily time frame. If I bring it up close here, you can see the upper boundary of the broadening formation. We had an overthrow move here. We turned off of it. We're still above our 50-period moving average. You got to take that out for a bigger sell-off, but we came to just slightly underneath that trend line here in the daily time frame. If I zoom out, you can see the massive broadening formation. Again, every time we've hit this trend line, you've had a major sell-off, 16%, nearly 16% in 2024, the summer of 2024. July, we hit it, went slightly higher in February, and you had the sell-off of 26%. I think you're going to see a move that's going to come back down towards the April low if we've topped, which I think, again, I've shared. I think that that's likely the case. And alternative would be that we pull back and we go up and hit this trend line one more time later in the fourth quarter. I think that's becoming less and less likely. I think we're going to get a couple more cuts out of the Fed. I think the stock market's going to sell off. I think by December or January, I think the Fed's going to panic. I think the stock market will sell off. I think Bitcoin will sell off. Fed will panic. And again, I think we'll get a bigger sell-off than what we had previously over here. It was 26% on the nearly 26% on NASDAQ. It was 21% on the S&P. During that time, it was with Bitcoin a sharp sell-off as well. Bitcoin, I think, is topped October 6th, in all likelihood, completing the 4-year cycle. Stock market's topping now. Then gold will probably sell off, and gold will go make one final high and complete its cycle after. The narrative on the internet right now is, oh, gold's going to sell off and all that money is going to go pouring into Bitcoin. You know, you get these narratives, these false narratives in the crypto community over and over again. The government's going to start buying Bitcoin with this Bitcoin strategic reserve. They never said that. That was a hoax promoted by influencers. It's like this. And again, Bitcoin, if we are moving into recession, Bitcoin's going to be the first to top because it's the asset with the most volatility. Then the stock market, which it did peak after so far with S&P, NASDAQ just under the highs here, could still move up into this trend line. Gold, the commodity cycle, will likely peak after that. That's the way it usually works. Before NASDAQ and S&P peaked in late 2021, early 2022, Bitcoin peaked before them. What we've just seen. Bitcoin is topped. You got a good shot that the stock market's going to top. Fed is going to cut, now start cutting, and you're probably going to get a quarter point cut out of the Fed, maybe another quarter point in December, unless they panic. If we start seeing a dramatic drop before then, personally, I think we're going to see by January in all likelihood. It might be December, but January, very beginning of the first quarter, I think that's when you're going to have the drop by, and I think you're going to see the Fed panic by then. Jumbo cuts with some kind of relief rally off of whatever sell-off we get. But remember, NASDAQ had the bursting of the tech bubble. It dropped 42% with the moving into the bear market with the bursting of the tech bubble. This bubble's bigger than that bubble. NASDAQ were to drop 42% from the highs that are coming in right here on October 10th, or maybe we go up a little higher and hit this trend line again. But if we drop at this 25,000 area, you're looking at a drop down by $10,000, $10,600. That's what happened with the bursting of the tech bubble. That takes the NASDAQ back to 14,600 or so, below this low right here. And the broadening formation is a reversal pattern. It's what usually happens with the broadening formation is when you complete the fifth wave. And again, if we continue on, it could complete over here, but it's likely, in my opinion, we're completing it right now at one of these two peaks right here, whether lower high or higher high with a little miniature double top. What happens with the broadening formations is you get a sell-off, and then what happens is sometimes you come down to this low or take it out, and then you get a partial rise. And we'll probably see that with the Fed rally. If we start collapsing in the stock market, going into the end of the year, the beginning of 2026, you're likely going to get the Fed panicking by the early part of the first quarter. My personal belief is by January, I think you're going to see the Fed panicking. So I think you're going to see some kind of collapse in the market if we are, in fact, topping and this broadening formation is now done. So just be aware of that again, 42% drop takes out the April low. That was the 16,000 area. You're going to 14,600 or so if we repeat a similar type of bursting of the tech bubble kind of scenario right here and now with the everything bubble. Fed and their policies have done this. They've blown this bubble so big, it's going to be some real pain. They're going to come in and claim to save us all, just like they did during the financial crisis. Their policies caused this mess. So buckle up your seatbelts if we turn off of this trend line right here with the slightly higher high or a lower high. But so far we have a lower high and a potential double top pattern. Got to take out October 10th low, confirm a lower high, lower low if we don't move higher. And if we take out the 50-period moving average, look for a bigger sell-off.